record this thing, and hopefully it'll work, and we can save it for other folks that don't have to be here. And, yeah, so, but thank you for asking about it. We asked about it. Pictures up. Do you want to just look at pictures of my grandkids for a couple hours? It would take that long. Yeah. Get it. No, you feel good. You know, you might do better. You might do better on the quiz if you just felt really good, right? Little kids. So, you guys were probably all really cute little kids too. At least your parents thought so, right? You're not anymore. You're just old people now, like the rest of us. There are cute little kids and then old people. That's it. That's all there is. It's really fun. We asked my grandson who's older, me or his dad, and his dad's 20 years younger than me or something, right? And he thinks about it a while, it's back and forth. It's hilarious. The girls have no idea. They think we're about the same age. See, that's what happens to you when you have kids. You're the same age as your parents and your grandparents. Old is old. That's it. Okay. So we're not going to do number one, right? We don't want to do number one because it's inventory. It's really hard. I'd recommend that you do not really, but it takes some work. Number one, I recommend when you do the inventory chapter, you dive right into that. Okay? So after we're done with this one, we'll dive into the next one. I'm going to quiz. Quiz 5, 6, 7? Yep. Yeah, okay. Number two, let's do that one, huh? You want to? This is just like we did in class today, so that'd be a decent place to start, don't you think? Okay, compute the ending balances. So instead of asking you for the journal entry, I'm asking you for the ending balance. Can I ask you for the journal entry instead? Sure. Do you have to do the journal entry to get the ending balance? Yes. So it doesn't matter what I ask for. Okay? So you don't care. Compute the ending balances and allowance for doubtful accounts and bad debt expense for each of the following independent situations. Ending accounts receivable is 120 and credit sales for the year total of 600. So I think a really good place to start would be to write down everything we know. You ever heard that from me before? Yeah, analytical decision making works really good. Okay? So what I've got is I'd like to know what's going on in allowance for doubtful accounts and what's going on in bad debt expense. So what do I know though? I know that accounts receivables, how much, guys? 120. Okay? What else do I know? Sales?
600,000.
All right. I know that. They recorded it, right? This is where they're at the end of the year. Okay? Fantastic. Receivables they sold on account and then they collected on account. Had a beginning balance. This is their ending balance. Maybe they wrote off some receivables, right guys? Okay? Yeah, so here's where they're at. Okay? And then it says they'd like to know what the ending balance should be in the allowance, I guess, huh? And what the ending balance should be in bad debt expense. So sure, which financial statement does the allowance go on? Balance sheet with accounts receivable, right? So let's keep those two together. Does that make sense? Do we have a balance and allowance for doubtful accounts? Oh, they're different on different parts of the problem. A, B, C, D. So we'll do them independently, right? Okay? All right, cool. So what I've got is allowance for doubtful accounts. And what's the other account I'm going to work with? Bad debt expense. Okay, now tell me, allowance for doubtful accounts represents what? What is it? It's a contra asset. Representing what? What is it? What is it? Tell me what it is in plain English. It's the portion of the accounts receivable that you're never going to collect. It's your estimate. This is going to be my estimate of the 120,000 I'm never going to see. All we're doing. Okay? That's it. Go away.
So how much are bad debt expense?
What's bad debt expense? It's an expense account. Allowance for doubtful accounts is a contra asset. Bad debt expense, and it goes on a balance sheet with accounts receivable. I'm literally going to do this. I'm going to show accounts receivable less the allowance for doubtful accounts. Those are good questions. Until you see it, guys, keep asking. This is net accounts receivable. It's the amount I expect to realize, the amount I expect to get paid, right? So I know I'm going to have 120,000 here, don't I? Sometimes the question I ask is, what's net realizable accounts receivable? Huh? What is it? It's the account receivable less whatever the allowance is. It's the net accounts receivable. Got it? And then the sales and the bad debt expense are going to go on the income statement, right? Everybody sees the picture here. Got the idea? Yeah? Yeah? We're good? Okay. It always looks so easy when I do it, huh? Practice. It is easy once you know how. Everything's that way. Like a heart surgeon. Did I tell you guys that in an executive MBA class? He thinks doing open heart surgery is about as easy as changing oil. Perhaps easier. He has trouble changing oil. Because he never does it. He doesn't know how. He knows how to do open heart surgery. You just cut people open, you take stuff out and put other stuff in. It's no big deal. That's how he describes it. You know how to do it, right? It's easy. So you know how to do everything. And you're getting there, aren't you? You guys wouldn't be sitting here if you weren't trying to get there. Okay? You're going to make it. You're going to make it. You're going to be fine. Okay, anyway. We'll turn you into, not scholars. We'll turn you into people who work hard. That better. You know, a scholar. Okay, anyway. So, let's do the first one then, huh? Here we go. Oh, by the way, what's the beginning balance and bad debt expense? Probably, if they don't say anything. It's probably nothing, huh? Okay, in the first one, in part A, we're doing A first, okay? Let's do A first. What does A say? Credit balance and the allowance for doubtful accounts of $2,000 prior to adjustment. So what happened is they had a balance last year, and then they wrote off some probably, and the balance was enough to cover them. And we still have 2 left, huh? That makes sense? Probably wrote off some last year. Okay, so there's 2,000 still left in there. Is that enough? Well, what do they want the uncollectibles to be? 2% of sales. All right, you tell me. 2% of sales. What are they estimating? That's the bad debt expense, isn't it? What if they were estimating based on the receivables? That would be the allowance, because the allowance is the portion of the receivables you're never going to collect. Bad debt expense is the portion of the sales you're never going to collect. And you can remember them easily. The allowance goes on the balance sheet with accounts receivable. Right? That's what it is the estimate of the receivables you're never going to get. And where does the bad debt expense go? On the income statement with the sales. It's your estimate of the sales you're never going to get. What do you bet sales are bigger than accounts receivable? The dollar amount. Look at this. There's 600,000 in sales, 120 in accounts receivable. Let's hope it's bigger. Do you ever collect your receivables? Don't you think? Receivables should be much less than sales. If your receivables are turning over, right? You want it to be much less. I like your receivables to be nothing and my sales to be huge. What do you think? That means I collected it. Right? Of course. Okay? So there, it looks like about 5 times they're collecting their receivables a year. 120 into 600. You divide it into 365 days and find out it's what? What is that? 7 times a year. Yeah, 5 into 350, 7. So, yeah, okay, fine. All right, anyway, so what account do I want to be what was it percent? 2%? Bad debt expense. What's 2% of 600,000?
12,000.
I'd like this to be 12,000. It's now 0. Tell me what the journal entry would be.
Bad debt expense, 12,000.
That's it. That's how I'm going to get 12,000 in that account, isn't it? Credit what? Allowance for doubtful accounts for 12,000. It's always going to be debit, bad debt expense, and credit allowance, you guys. Wow. Look at that. So I'm going to put 12 in here. I'm just posting my entry here, right, guys? And I'm going to put 12 in here. Can you tell me what the allowance is now? It's like 14,000 to me. Can you tell me what net accounts receivable would be? If you have 120 receivables, would you think you're never going to collect 14? What do you think you are going to collect? 106. Is this getting to be logical to you now? Doesn't take long, does it? One thing about doing it this way, you just read the chapter, then I talked about it, I showed you how to do this, and now I'm showing you again, and you're getting it, aren't you? Yeah. We're going to get so. We can cut out one of those. You just have to show you once, you read it, and I'll show you once. That's intermediate accounting, pretty much. Okay, then we'll do something else. What are you going to do when you go to work? Read it. Got it? Then you know it. Wouldn't it be cool if you could just read stuff and know it? I never read anything twice, ever. Horrible. Waste of time. Read carefully, slowly, get it. And I don't think you guys are trained to do that yet, but you're getting there, right? You're getting there. When you read now, you're trying to understand it, aren't you? Instead of just reading. Is that working? I'm not the only person doing this kind of stuff. Your other professors do too, don't they? In different ways. Different ways. Nobody as mean as me. They will be. They will be. You'll run across. I know some people around campus. I'm not going to tell you who they are because you won't take the class as well. Because listen, I mean, come on. Okay, anyway, it might be serious. What's the allowance for doubtful account today? What's the answer? We just did 8. What's the answer? 14. 14? That's it. What's bad debt expense?
12.
12. Can you answer those questions? No. Of course you can. Okay. All right, let's do another one. Let's do B. Exactly the same situation, right? Accounts receivable was how much? 120 was it? Sales was
600.
600? Sure. Okay, you guys do the next one. 7. Got to write down what the allowance is now. How much is the allowance this time? 3,000 debit. What happened? And bad debt expense would be nothing, right? Before we record any for the year. What happened? They had a balance in the allowance at the end of last year that would have been a credit because it was a contra account. And what did they do during the year?
Right up.
They wrote off what? 3,000 more than the allowance was. The allowance was 10,000 at the end of last year. How much did they write off? 13. Debit allowance and credit receivable, right, guys? Yeah, it's almost happening. Okay? Are we getting it? I'm slower now, right? Slow. A little bit slow. Okay. Second time, you can go faster anyway. Yeah. Okay, but you got it? It works, doesn't it, guys? You tell me what the entry is then. What does it say? This time, uncollectibles are 2.5% of credit sales. What are you estimating? Bad debts. Go ahead and do it. Write your journal entry and finish those T accounts. Bet you can do it. It's going to be the same entry in terms of the debits and credits. We're increasing bad debt expense and increasing the allowance, aren't we? But you got a lot to put in the allowance this time because it's got a debit of 3. You got to get rid of that first and then put your balance in, right?
Why is it 3,000 on the other side this time?
Okay, what they said, there's a debit balance. So what happened? Maybe last year what you had was an allowance. I don't know what the number was, but maybe we had 10,000 in there, right? Mm-hmm. And then during the year they wrote off, it must have written off 13,000 to get a debit balance. The allowance wasn't big enough.
Okay.
What's the journal entry for writing off accounts, guys? Good question. What's the journal entry? Debit the allowance because I found some of them, right? I'm saying I found some of these, I'm getting rid of it. I found more than the balance was. So I get rid of all of it. Gives me a debit in the account. And credit what, everybody? I'm writing off accounts receivable. Yes. That was a great question. Now you got it? Mm-hmm. Okay? That's how you do it, one piece at a time. One more thing, one more thing, one more thing. That's great. Ask a question anytime you don't know. Absolutely. So did you guys get the entry? You know it does. What's the entry? Debit bad debt expense. You know that, right? And because we're increasing the expense. And credit what? Always. Allowance for doubtful accounts. So this is going to be easy. You know the debits and credits. You just got to get the amount, huh? Okay. What do you want what to be? It says what? 2.5% of credit sales. How much is that? Is $15,000? What's $15,000? Bad debt expense, because we are estimating based on the sales. The portion of sales I'm never going to collect is bad debt expense, right? That's what this is, okay? So if it's 2.5% of 600, it's 15. How do I get from 0 up to 15? I mean, you debit it for 15, don't you guys? You think that's what you do? Of course you do, right? And what would you credit? The allowance, you have to. So if you estimate based on sales, you're going to just let the allowance fall wherever it does. You're going to make bad debt expense be the number you want it to be. And you just let allowance go where it goes. Well, what happens to the allowance? What is the ending allowance? 12. So if I asked for the journal entry, you'd give me this journal entry, wouldn't you? If I asked for the ending balances, what would you give me? 12 for allowance and 15 for bad debt expense. What if I asked you for net realizable account receivable, what would you do? About 120 less 12 is 108. Boom. You okay? Okay. You guys do see. Same idea. Exactly the same. T accounts, plug in what you know. Write down your T accounts, plug in what you know. Solve what we don't know. Make a journal entry. Done. I think this is a 30 seconds per part problem. You could do this in 2 minutes and have those points. Easily. But work carefully. Do it in 3. Oh, you have a problem.
Turn the audio on this time.
Yeah.
I hope so. The other one, my 211 class, I recorded it and it started saving it, and then all of a sudden it says crash, lost file. That's the first time I had that one. Gone. Yeah, I looked around. They weren't kidding. But it does help me turn it on, you're right. Good thing I have you guys around. Then I have to remember to record it. Put it on YouTube or YouTube and then on Google. Way too complex. That's a lot of video. No memory. You get pretty fast at it. We're in about 120 videos or something. Anybody a subscriber of mine? I've got a few subscribers. You want to? Did they send you a notice that I posted one every time I post one? It goes to my email. If you're a subscriber, yeah. And with all the other emails you don't read. Yeah, but anyway, stuff, yeah. It's pretty cool, you know. And they congratulate me every time I post one. You guys have an answer? Yes? Okay, so how much, what do they tell us we have? Let's see, what do we got? This is C. We have accounts receivable, don't we? How much is accounts receivable? Still 120, isn't it? Let's see, how much was sales? Still 600? Okay, what's the balancing allowance this time? How much? 2,000 credit? Okay, we're back to that again. Okay, bad debt expense is nothing, probably. Didn't mention it. Okay, same scenario. Only this time, what do we know? We want the allowance to be 10%, right? If you're taking 10% of the receivables, we think we're never going to collect 10% of the receivables. Is that right? Which is what the allowance should be then. True? So I want to make this be how much? 12,000? Is that what you guys did? How much do I have to add to it then? 10. I'm going to credit allowance for doubtful accounts. What am I going to debit every single time? Bad debt expense. How can half of my students miss this? And the other half will get it perfect. What category are you guys going to be in? Perfect. You're here. You're studying it. You're getting it.
So we're always computing the end balance.
Well, yeah, but I might ask you for the journal entry.
Okay.
This problem asked you for the balances, so the allowance is 12, bad debt expense is 10. But if I asked you for the journal entry, what would you do, guys? Write it down as a journal entry. It's just that math. If you know the journal entry, you know the balances. In order to get the journal entry, you got to know what you want the balances to be, right? It works perfect. So just be careful, what did I ask for? Is that right? So it's only 10, it's not 12, isn't it? That's because there's already 2 in the account, of course. Okay? And let's compare that to D. You guys go ahead and do D now. Did you notice that, by the way, on the first 2, were they both sales? Right? They're both based on sales. If I use exactly the same percentage, you get exactly the same journal entry, wouldn't you? Huh? Do you agree? They were different because they used different percentages. Right? So if you have exactly the same journal entry, don't let that bother you. If it's 1% of sales, it's 1% of sales, right? A lot of times I'll do that. I'll use the same one. People who don't know what they're doing, it blows their mind. Like, can't beat the same entry. Of course it can. You guys can do this, can't you? What's the balance now, by the way? In allowance? Debit 3,000. That's the difference, huh? So it's going to change the journal entry, of course. We got that $3,000 debit balance by writing off more than the balance of the account, right? At the end of last year, beginning of this year. Our estimate wasn't big enough. With hindsight, we know that. And it's going to change bad debt expense is what it's going to do. It's going to make it more, isn't it? You guys done yet? How many of you are done? 2. Come on. What do you need to do? Did you write down everything I just had there, right? Everything gave you. What do you need to know? How much is bad debt expense and how much is allowance, right? What information does it give you?
It's 10% of the account receivable.
Yeah, we already know what that is. What is it?
12,000.
12,000. What account should be 12,000?
Allowances.
Yeah. Did you have that down, everybody? Make your entry. How much is it for? How much do you have to credit allowance for doubtful accounts to get back to zero? Well, 3 to get back to 0, and then another 12 to get to a credit of 12, right? So you're right, 15,000. You've got to credit this account for 15, don't you? You know what the entry is? It's credit allowance for doubtful accounts for 15,000. And the answer is going to be 12 for both of those, isn't it? That's kind of nerve-wracking, isn't it? But it is. There's 10% of receivables. Okay, what's bad debt expense going to be, though? Of course. It's got to be 15. You don't have a choice. Debits have to equal credits. So I'm going to put 15 in here. So my two answers on C and D for bad debt expense are 10 and 15. They're different, of course, because you have a different balance in the allowance. Got it? It's just another adjusting journal entry. That's all we're doing. You guys solid with this stuff? Now practice some of them. Make up some and do it, right? You just nailed that last quiz. Can you nail this one too? Yes. Yes? Know how to do it. And make that, turn that corner. You gotta quit, you gotta start believing you can do stuff. Don't ever believe you can't. And if you screw up, so what? You've done sports. What happens if you know you're gonna lose? Why bother to go out there, right? It's over, you're done. That's all I could do. I was sewing coordinator. I wrestled in high school. I have no coordination whatsoever. I know, you're thinking, heavyweight? No. 130 pounds or something. No kidding. Oh, wow. 70 pounds ago. Jeez. Okay, anyway. I'm still pretty solid, though. I'm not very tall. I'm not that fat. My grandkids, it's so sweet. No, actually, my grandson says fat belly. Yeah, he does. Yeah, my granddaughter's so sweet. Yeah, anyway. He's right, too. But all I did was I lifted weights 2 times a day. So I was all bulked up. And I'd walk into the weigh-in and look at the guy. You ever seen boxers? Right? And I'd stare him down, and he'd give up. I won all the time in high school. Then I went to college, and I got the practice out of people, so I didn't buy it. Right? And they were really good. I was awesome. So, but anyway, yeah. In college, I was awesome. High school, I was about average, probably. Anyway, big deal. Nobody cares. At least about me. So anyway, we had pictures up because my dad's 90, and we're going to do they're doing a party for him. I won't be able to be there. It's next week. And for his 90th birthday. And so they're putting up a picture thing, you know. So I was going through old pictures, and I found pictures of me wrestling. It's really something. My daughter looked at it one time and says, "Who is that?" I don't know. Okay, let's do something else. I told her it was me. She didn't believe me. You don't need to do 1. You don't need to do 3, right? That's inventory 2. Boy, those are hard, too. Do 3. 4 was really from the earlier chapter, where you had to know what to do with the cumulative effect of the change in accounting principle. It goes on your earning statement, right? And the loss from discontinued operations goes below net income. That'd be a good one to do to get ready for the test. Not for ready for the test. Remember that one. Okay? Look, you want to do number 5? You all right? These are pretty easy. What do you do? And this is in this chapter. They're recording accounts receivable and sales, and then they have these things called sales returns and allowances and sales discounts. Okay? Okay. Sales is what kind of account? Revenue. What do you think sales returns and allowances is? The return is you return the product, right? My wife buys from Nordstrom's all the time. If it doesn't fit her, she doesn't like it, she gives it, she just sends it back to them. They pay the freight both ways. And that's it. What kind of a margin do they have on their product? What are they selling for compared to the cost? But she does it all the time, right? She likes their store, and there's no Nordstrom's here, which is the strangest thing. Why not? They're great stores. They are, in fact, they are really good stores. But anyway, she buys this stuff online, and it comes and she sends it back and all of this stuff. Well, what would that be for them? It's a return, right? Okay. What's an allowance? When I was at Ostrom's, we used to send mushrooms out, have mushrooms delivered. They were fresh mushrooms. Sometimes the truck drivers, they would deliver in the middle of the night, and the truck drivers would leave the mushrooms on the loading dock, right, of produce houses after they would lock the door. The truck driver was an idiot, basically, right, in this one, right? They'd leave them there, right? And mushrooms are 98% water. Even in Seattle, Washington, even in Seattle, it gets hot sometimes. It'd be 90 degrees, which is very hot there. Humid, 90 degrees. And what would happen to mushrooms, you think? It's mostly water. They mold, actually what they really do is they turn the liquid and it goes to the bottom of the cases, all over the loading dock. We did not want them back. Although one time we had a guy load some up and bring them down and throw them in our offices. So fast. Because we had a couple of times it happened, they have to push their loading dock. It's a huge mess. You think they pay for those mushrooms? No, you delivered after they left, right? They loaded their trucks and left, you relayed, delivered them. So what's that? We don't give them the product back. Well, no, it's going to be a loss either way. But it's either a return or, well, not returning it. So it's a allowance. That's what allowance is. Just reduce the price because the merchandise is faulty or something. So now you know what a return and allowance is, huh? There are sales returns and allowances. Stuff that's returned, you give an allowance. And guess what? There's purchase returns and allowances. If I bought something, I return it. I have a purchase return allowance. See, sales is a revenue. What do you think sales returns and allowances? Contra revenue. You got it. Normal balance? Contra? Debit. You got it. Sales discount is if you pay me early, right? Within 10 days, say, it might be 2% 10 net 30 or 1% 10 net 30. It means you get a 1 or 2% discount if you pay within the 10 days. If not, net 30 means at the end of 30 days you owe me the whole thing. So you try and pay within 10 days, of course, right? Because that's huge interest. 2% interest for 20 days. You have to pay in 30 days anyway, right? You're paying in 20, or in 10 rather. So it's 20 days earlier you're paying. And it's 2% interest every 20 days. How many 20-day periods in a year? About 18. What's 18 times 2? 36% interest. I've fired people before for letting the discounts be passed on a continuous basis, right? Bookkeeper, never ever let a discount go. About the third or fourth time, you're out of there. You're just throwing away profits from the bottom line, right? Net income's less because you didn't take a discount. What if it's on $1 million purchase? It's 2% of $1 million. How much did you just throw away? That's 20 grand. Gone. Person's making 20,000 a year and throws away 20,000. Or hire somebody else, right? So, you know what? I was era when there's a company that was working for Ostrom's, and they weren't taking their discounts because they thought they didn't have any cash. I convinced them to go to the bank and borrow a little more money, and we started taking all the discounts. The discounts during the year were bigger than my salary was that we were taking. I more than paid for my salary with one decision. Do you want to know what discounts are? Huh? And then just let yourself think, right? Purchases are expensive. What do you think purchase discounts, purchase returns and allowances is? Contra expense. I'm going to show sales, less sales returns and allowances, less sales discounts is net sales. I'm going to show purchases for buying inventory, purchases, less purchase discounts and purchase returns and allowances for net purchases. They're really easy to account for. So let's do something. Okay, you got to hope I give you one of these. I don't know if I did or not, but you got to hope I give you one of these. Western Company sold 5,000 of goods to Southern Company on credit. At the time of the sale, they recorded a debit to accounts receivable and a credit to sales revenue of 5,000. This is called the gross method, by the way, but you don't have to worry about net in this class. An intermediate will do that. So what they did was they debited accounts receivable for 5,000. Everybody agree? And they credit sales for 5,000. I know you know how to do that, right? They told you they did anyway. Terms are 1% 10 net 30. If I pay within 10 days, if my customer pays within 10 days, I will let them take how much off the bill? 1% of 5,000 is $50. They'll pay me $4,950, right? If they wait longer than that, what do they have to do? Pay the whole amount. That's it. Okay? So Southern paid the balance due on May 10th. So this is May 1, was it? What are they doing? By the way, nobody ever pays early because of the time value of money, right? You can earn interest on it. You don't ever pay early, right? But you don't pay late either, okay? You don't pay on the 11th and take your discount. People get really upset with it, okay? It screws up your business relationship. But you expect them to take it on the 10th. So how much cash are they going to give me? $4,950. Would you guys agree? Aren't we going to give them a $50 discount? For paying on time, right? Well, paying within the terms, okay? How much accounts receivable needs to go away, you guys? They owe me $5,000. They're never going to pay me any more. How much accounts receivable needs to go away? 5,000. Oh, I need 50 and something. Guess what it is? How about, well, it's not return an allowance. They didn't return anything. It's a sales what? Discount. Ta-da! It's that contract account. Boom, it's there. This is easy, isn't it? Isn't that right? You can get this, can't you? Read the chapter, work a couple problems, you'll have it made. Okay? Got this one made. This one wired. We got some easy stuff. Okay. In B, that's A, right? For those who just came in, we're doing the quiz from last summer, or the summer before last, 13, and we're now on number 5. Doing an easy one, okay? So in B, what happens? Then they're totally separate. It says they're independent. Southern returned half the goods on May 4th. So on May 1st, you don't have to write it down again, but just so we make sure we're all on the same page. May 1st, they still do the same thing. Debit accounts receivable 5,000, right? And credit sales 5,000. So we have an account receivable of 5,000. Everybody agree with that? Very good. Okay? They returned half of it on May 4th, before the discount date, right? If they returned it, what would we do? You could, by the way, debit sales and credit accounts receivable, but most people would not do that because they want to keep track of how big the returns were, because the returns cost you money. You shipped it to them and paid the freight. They ship it back to you. You might pay the freight, or they might pay it, depending on whose fault it was, right? That it has to be returned. But guess what? You have to restock it. There might be damage to the product. You know, there's a whole bunch of costs associated with this, right? Do you want to ship people the wrong thing and have it returned? No, 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 no. How mad do you get when you buy something? We buy a lot of stuff online nowadays, don't we? What happens when they send you the wrong thing? You're just annoyed. I got an Oregon T-shirt from my brother to celebrate their second place. Big deal. Who remembers that? But anyway, they won the first, what do they call that thing? Semi-final, whatever it was. They won that, so I got him a T-shirt, right? And I went to University of Oregon. And so I get him this T-shirt. He gets there and it's too small for him. He's a lot smaller than me, so I got him a small. He usually wears a small. It came, I don't know, from Thailand or something, right? So then I says, okay, fine. So he returned it. We're great. You know, okay, so he returns it. I pay the freight both ways, right? And so then we order another one. Got him a large. It was made in another country. This was in the Philippines or something. I don't remember the countries. Guess what? The large, he swims in, right? It's a great big huge thing. So we now know that in the two countries they make the sizes different. Oh, that's nice to know, right? But anyway, so now he's got a shirt that's too big for him. But what's the deal with this? How frustrated do you get? It's the wrong stuff, you know, wasn't what you ordered or what you expected. Okay, so you don't want that happening with your customers, but if it does happen, do they have the right to return it? Sure, it's the wrong stuff, right? Or something they didn't order, right? Okay, so what do? Or if it's damaged or something. They returned it. So what happens to accounts receivable if they returned half of it? Do they owe you 5 anymore? Of course not. They now owe you 2,500, right? What are you going to do? You better credit it. This just becomes common sense. Just let it be. You guys know how to handle these accounts. You know if they owed you 5, that you debit 5. You know if you're going to forgive 2,500 because they returned it, you credit 2,500, don't you? You know this. Just let it be common sense. And what do you want to debit for 2,500? I don't want to reverse the sale. I want to record, keep track of how much got returned. What do I call it? Sales what? Returns and allowances. You like it? We usually use one account. If it was damaged goods and they didn't return it, but I still gave them the 2,500 credit against their account, I'd still debit sales, returns, and allowances and credit accounts receivable. Like it? That's why we call it a credit to their account, by the way. Credits aren't good or bad, right? They're left and right. It's a credit or receivable, so we call it a credit. If you debit a receivable, you call it a debit to their account. We're doing our accounting, not theirs, right? Banks doing the same thing. When they credit your account, they owe you more. When they credit your cash account, they're putting more in your cash account, they owe you more money. Those are payables to them, right? You put money in the bank. And what do they do when they debit your account? They reduce the payable, reducing your account. They're not doing your accounting, they're doing theirs. And that really confuses students, particularly students who work in a bank. It's like, well, wait a minute, accounting's backwards. No, it's not. You're doing the bank's accounting, not the customer's, okay? So if you ever work with banks, you'll know that, I guess. Then what happens on May 10th? On May 10th, they're still within the discount term. What do you want to do? How much cash are they going to give you? How much accounts receivable do you need to get rid of? And how much discount do you have? It's going to still be a discount, right? You guys still want to give them a $50 discount? I don't think so. How much did they buy from you? They didn't buy that much from you. How much did they buy from you? 2,500. How much discount are you going to give them? 25 bucks, right? Only 1% of that. Excellent. So how much cash do you want from them, seeing as they owed you $2,500 and you're going to credit accounts receivable for the other $2,500? Right, guys? They only owe you $2,500. You credit accounts receivable for $2,500 and they've paid the full thing, haven't they? See it? How much cash are they going to give you, obviously? 2,475. You can do this, can't you? Let yourself think through it. You're not memorizing it, right? Just thinking your way through. You guys are looking at me like this can't be that easy. He's making it easier than it is. No, I'm not. Wait till you see this one. Southern paid their bill on May 30th. There are no returns. What happens to the discount if they go past the discount date? They don't get one. So the way they recorded it on May 1st was what? Debit accounts receivable 5,000, right, guys? Credit sales 5,000. Guess what they're going to do when they pay you now? They won't. And of course, they're not going to pay you until the month's gone by, right? What are they going to pay you? How much? They don't get a discount. It's $5,000. What are you going to credit? Yeah. Now, if you didn't relax, you might actually miss a question like this, huh? If you relax and read it, think about it, it'll just fall right up. Okay? Are we good? Okay. So let's do something else. Let's do something hard. Practice. It's not really hard. Just if you haven't done them, or you guys have checking accounts? How many of you have a checking account? Are your parents insane people? No. You guys do know that if you call the bank, or nowadays you don't call, you go online and you check what your balance is, right? That's not necessarily how much you have in the bank. Are you guys aware of that?
It's how much
That's how much they think you have in the bank. What if you just wrote a bunch of checks? The bank doesn't know about it. Right? Has anybody ever experienced this? Anybody ever written checks when they didn't have money in the account and have an overdraft? I got a really great story on this one. My son's mother, God rest her soul, she passed away from cancer. She has gastric cancer. But, real shock. But anyway, a couple of years ago. Anyway, Kathy was Kathy Richardson. She was Kathy Robertson before she married me. Kathy with a K, right? And then she became Kathy Richardson. Not much of a change up. And I'm Keith Richardson, also KR, right? Both KR. And we had a bank account together. Of course, we were married. And then when we got divorced, she just kept her banking at the same bank. Right up the street from her. I only moved the block or two away because we have a small son. So, going back and forth all the time. But anyway, so, it's, what do you think, how do you think we'd be sorted in the bank's files? You know, K. Richardson, right next to each other, right? Okay. So the bank made a mistake. They took my paycheck and put it in her account. And then she had a habit of calling the bank. In those days, we call them, right? Or computers were everything. So she'd call and check how much money she had. And she found out that she'd made a mistake. She had a lot more money than she thought she did. A lot. I was really well paid in those days. So then, a few days later, my checks, the banker called me up. He didn't bounce the checks. He just called me up and said, Steve, your account's overdrawn. What the hell? What are you doing? And I says, well, no, it's not. Didn't my paycheck go in? It's automatic. No, it was even an automatic deposit. I think I dropped it off in those days. But anyway, he says, no, you didn't put anything in. You didn't put anything in. I says, I did too. Look for it. I got a receipt right here. Deposit slip. So they looked around and he called me right back. He says, oh my God, I have good news. Bad news. The good news is I found your deposit. We're going to put it in your account. So don't worry about anything. Everything's cool. He says, what's the bad news? He says, we accidentally put it in your wife's account. I said, well, just take it out. It's okay. She spent most of it. She wrote checks. I laughed about it for years and years and years, right up to the year she died. We were still laughing. Well, I was laughing about it. She kind of laughed about it. But I paid for everything that she did. Wow. My son went with her. I liked her. But it wasn't such a great laugh. And she was back to school stuff. So, yeah. So all guys aren't horrible all the time. I won't tell you why we got divorced. Because of an ass. I'll tell you. That's right. Yeah, that's pretty much it. All I did was work and ignore everything but work. Yeah, pretty much. Yeah, that's pretty much true. do that, right? Do a bank reconciliation, find out how much money. How many of you do bank reconciliation in every month? That ought to be everybody that has a bank account. A bank reconciliation every month. How do you know how much cash you have? Oh, you don't. That's real smart. If you ever run a business, don't do that. They're real simple to do. This is what it is, okay? Here's what we're going to do. The whole reason we do this is to see if we really have the amount of cash we think we have. What are you doing in the general ledger with your cash, guys? What are you doing in your general ledger with your cash? I've got a beginning balance. All the deposits I record in here, right? Debit. All the checks I record in here, credit. Isn't that what we do? You know how to debit and credit cash. And we have an ending balance. So we know what we think we have in the bank, and then the bank sends us the bank statement and it doesn't agree. Why does it not agree? It almost never does. Because there's an error, that's possible, but most likely not. Oh, by the way, if there is an error, whose mistake is it probably? Don't call up the bank and yell at them if you can't do your bank reconciliation. They probably didn't make a mistake. You probably did. What does the bank do for a living? Let's see, they take money in and they pay money out. Pretty much, right? What do you bet they're pretty good at that? Might you be doing other things even if you're running a business? Yes, mistakes probably goes. I mean, they do make mistakes sometimes. I just gave you the one example I can think of in my entire career. Just happened to happen to my wife, my ex-wife, right? Okay? Just smart. Okay, anyway. So, the bank probably wouldn't have made mistakes anyway. They rarely do. Hopefully we didn't make a mistake, but if we did, we'll find it. Okay, so that's possible. There might be mistakes. What else might be the difference between what the bank thinks we have and what we think we have? Oh, come on. Yeah, outstanding items. What two outstanding things could there be? Checks. I may have written a bunch of checks. You know what companies do? They write checks on the day they're due, right? They don't, no, never early. You write it on the day that it's due, and you have it mailed on the day that it's due, or you wire the funds that day, depending on how you're set up, right? Okay, you don't pay early. So if you mail them, you might mail 100,000 checks the last day of the year. How many of them clear the bank? Seeing as you mail them at the close of business the last day of the year. None. You got 100,000 outstanding checks. It's a lot of money. So what we have to do is from the bank statement, right, balance, take away all those outstanding checks. Make sense? That's easy. That's what you do in your own too, by the way. You're going to know how to do this for your own accounts from now and do it every month. Okay? You'll never screw up your account. I bet you do it every month. You ever have an overdraft, right? And after your folks got done yelling at you, yeah. Did you have a bunch of charges?
A little bit. They were kind of leaning on me.
Yeah, because it's your first time. Do it again. No, don't do that. Don't test it. Yeah, okay. Has your dad been banking with them a long time or something?
Yeah.
Yeah, that's why they were leaning on you. Yeah, they don't want to lose his business. And that's it. That's hard. Okay, anyway, so what else is there maybe besides checks that you've written that have cleared the bank? What else could be outstanding? You know, look, you take money out of the bank and you also put money into the bank. Come on. What do you call the stuff you put in? Deposits. Could you have mailed a deposit to the bank? Because what we do is we take all the checks our customers send us and we stamp on the back for deposit only. That way nobody can cash it, right? They're just going to go in your account. And your account number's even on the stamp, right? So it's, and then you mail them to the bank. Because it's a waste of time to take them there. Right? They'll get there the next day anyway, right? So you mail them to the bank. Guess what? The last day, or if it's over a weekend, the last few days, don't get there. Everybody got the idea? That's it. Plus, banks quit posting at 3 in the afternoon, and so even if you deliver it to the bank after 3, guess what? The deposit's not recorded until the next day. So you could have deposits in transit. What would you have to do with those? Add them to the bank balance. Could there be some other things? Well, you know what? The bank charges us fees to have an account with them. We usually don't record those until what? They send us the bank statement, we know how much it is. You have to record your service fee. Then there's some other things that are quite common. Your customer might pay you with a check where they don't have any funds in the bank. It's called non-sufficient funds. It's real common, okay? And they give you a bad check, right? So you get this check, and there's no funds in the bank. So what happens is the bank deposits it to your account. You add it to your account, right? Then it comes back from the person who wrote you the account, and comes back from their bank with no funds, right? So they don't get the money. So then your bank takes the money back out of your account and charges you a fee. Got the idea? Then what you do is you try to collect both the receivable from your customer again and the fee. You just hope you get their payment at all. Okay, you hope it's not a bad debt. It might be a bad debt, right? Everybody got it? So that could happen. So what are we going to have to do with that? That's deducted from our account. What do we do with the service fees from the bank? That's deducted from our account. And we'll make a journal entry for that. By the way, do you make journal entries for the bank or your company? It's a silly question. Who do we make journal entries for? Ourselves. So are you going to make any journal entries for the outstanding checks or the deposits in transit? Because they haven't gotten to the bank yet, they think you're insane. Right? Call them and say, oh, you need to make a journal entry. Make you agree with, no, that needs to be nice. So it's okay that it doesn't agree until it gets there. But we'll make journal entries for stuff that we didn't know about that we should record. Service fees, NSF checks, non-sufficient funds checks, right? Balance checks. Okay, then what else? Well, you might have things like the bank might be paying bills for you. Anybody do that kind of stuff? You have them automatically pay a bill, and you haven't recorded it yet. You have to record that out of your cash account because the bank already took it out. Or they might be collecting money for you. We do that a lot too. When I sold my house in Ellensburg, Washington, when I moved to Terre Haute, Indiana, I didn't want the person who bought the house from me. I carried the contract. Unfortunately, she paid it off really early. I would have still been collecting. 30-year contract. At 12% interest. And she arranged financing and paid it all off. I was making so much money in that contract. I was really annoyed. And then my wife spent the money. Right? Because it came in, right? You bought furniture, some stupid thing. And anyway, so, yeah. But I didn't want to get divorced with her, so she has furniture. The earlier one never had furniture. Waste of money. Yeah, so, yeah, oh well. Guys, it's not a waste of money if you're married. Yeah. So, okay. Anyway, what do you think, Dave? Is furniture a waste of money? Think? Would you rather be rich? Would you be able to travel to the Bahamas whenever you felt like it without furniture? Oh, there's an interesting choice. How about would you rather have a Volvo or a little Chevrolet of some kind, whatever they're called? Oh, they don't fit long. Yeah. You can have trips, right? Or you'd be like me, you can drink good bourbon. No, that's a real waste. I don't drink real good bourbon. It's too expensive. Okay, anyway. So you got the idea of these things, Joe? If they were collecting money for us, what would we do? We haven't recorded it yet, record it. It's no big deal. These are called reconciling items. So what I want you to do with this thing is I'd like you to tell me, first, they say on November 30th, 2012, the balance in the bank is $10,740.93, right? And then they have a whole bunch of checks and a whole bunch of cash receipts. You see it?
Yep.
What do I need to know to do a bank reconciliation? I don't want the beginning balance. What do I want? The ending balance. Give me the December 31st balance in cash. That's the first thing you'd have to do. So this problem was a real pain. How would you do it? Beginning cash plus the deposits less the checks is the ending. Do it, quick. Go. I don't know what the answer is to this. You're going to have to do it or we can't work it. Go, guys. What would you do? Take the beginning balance and add the deposits. You can't do it. Add the deposits and subtract the checks, right? And get the ending balance. Do a little T account for it, huh? Just like that. And if you didn't realize to do that, you could sit and look at this problem for the rest of your life, huh? You've got to have the balance when you're doing the reconciliation, don't you? So we got the beginning, and we're going to work our way down to the ending. Tell me what the cash receipts are. That's the deposits. Tell me what the cash disbursements are. That's the checks. Add them up. Take the calculator. Okay, this half the room, from here over, right about in here, you guys do the cash receipts. This side, do the cash disbursements. So we can double check. Okay? That make sense? What did I say? Cash receipts this side, cash disbursements that side. We'll compare totals. Hurry. This is a really good turn on, guys. I just must be such a sweet guy. Everybody wants to hang out. If I bought you good burgers. Yeah. And maybe. Probably not 21 either. Yeah, so that's not that. And your 21st birthday coming up. Buy you a burger. Okay. I'm not sexist. Absolutely. I agree with women. My wife will have to join us. She's too young and pretty.
You can bring the grandkids.
Yeah. And you know, what's funny is she was 21, I was 31 when we started dating. It bothered her when I hung out with young girls. You know, they were her age, you know, my students. Well, I just had a drink with one of my students. Geez, what's wrong?
Oh, you don't have your
She was
students?
her age. Huh?
You don't have with your students?
Oh, I was young. I was only 29 when I started teaching. Why wouldn't I?
Oh.
I never dated anybody that was currently in one of my classes. Previously, well, yeah. My poor wife, Laura, she took this guy who went by the nickname Pro. Patrick Rory O'Shaughnessy, who's passed away now, but he was far meaner than me. And she had to take him because I was the only other option. Yeah. So she didn't want to take a class from me for obvious reasons. She wasn't my student. She was a student when I was a professor at the same university. Yes. She was a little older for 21 because she had a 3-year-old daughter. And I didn't marry her for 10 years. It was okay. I was 41 and she was 31. It sounds better, doesn't it? Yeah, I'm 64 and she's whatever she is, 50-something. Now it sounds fine. Yeah. But I'm wonderful.
She was so long.
Because I was never going to get married again, and because she was too young. She should have had somebody her own age. But then she decided she was going to go marry somebody else, so I asked her. I'm not kidding. She's kind of like that. My proposal was, oh, we got married. Would that be all right? One for God's sake. So then I said we should have an appropriate engagement period, another 10 years. Don't you think? Date 10, engagement 10. She didn't buy it. I was married within a year. I love that story. Son. Okay, what's the beginning? 10 what? I don't have this.
10, 7, 4, 0, 93 cents.
And what?
93 cents.
Okay. Okay, how much were the cash receipts, gang?
3,516.98.
8,000?
3,000.
Is that all they had come in? This company's ridiculous. Look how much they have. Okay, 3 what?
3,560.98.
Okay. What were the checks, guys?
556.5.28.
They got an awful lot of cash laying around. Okay, for those loads they're using. Add 10,740 plus 3,560 and subtract 5,565, and what'd you get for ending, gang? Easy. You guys do know the beginning balance plus cash in, less cash out is ending balance, right? Just have to let yourself relax and realize what's going on here. What is that, about 8 or something? By the way, you guys agreed with both the receipts and the disbursements, right?
Yep.
Okay. Somebody tell me what the balance is.
8736.63.
Everybody good? Okay, so what I want to do is I want to adjust from this ending balance on the books. We'll call that balance per books. Oh, by the way, how you set this up doesn't make any difference. It's not a financial statement. You can use any format you want, right? You're not going to give it to anybody anyway. What we're going to do is we're going to find out what journal entry we need to do to make cash be correct in the balance sheet. Does that make sense? And at the same time, we'll record whatever revenues and expenses we need to record. That's all we're doing. So balance per books. What do you think it is? 8, 7, 3, 6, 6, 3. Don't use the 10, 7, 40. That's last month, right? Okay, good. What do you bet? We're going to write down the balance per bank. Now, what do we know about the balance per bank? What do we have, guys? On the bank statement, what do they show you? You guys don't have a copy of this either? Oh, okay, good. All right. You guys are all the blind. Yeah, this is so small. Okay, so the balance per bank, what is it? It's always listed. What is it? Balance per this statement. What is it? 10-950-101? Do you guys agree? 10-950-101. How much do we need to reconcile? That's it, right? The difference between this and this, I have to reconcile. That's how much. I'm going to keep working until I get an adjusted balance that agrees, okay? What is the correct balance, in other words? Because the bank probably isn't exactly correct, and I'm not probably correct, actually quite correct. I got to make a journal entry probably. And the bank probably has what? What do we think the bank's going to have? I bet we need to add deposits in transit. If there are any, we'll do it. Deposits on the way to them, okay? Make sense? And then I'm going to deduct what? Outstanding checks. And then over on the books, what am I going to probably have? Maybe deduct service charges. We'll see what else there is. Maybe there's NSF checks, non-sufficient fund checks. Maybe there's some other stuff, I don't know. But you know what? You can look at the bank statement and you can check out whether there are non-sufficient fund checks. Look at that. $250 NSF next to it. What do you bet that's a non-sufficient fund? Oh, look at that. Symbols say NSF, non-sufficient funds. Everybody see it? You looking at the statement? Yeah? Non-sufficient funds, huh? So what do? I think I deduct an NSF check, too. How much? $250. Let's go in the wrong direction, but we'll do it anyway. Okay, I got to pick it up. I'm going to make a journal entry for that. I'm going to put it back into accounts receivable. I do. Somebody paid me, and then, right, it bounced. Okay, what else do we have? I see an SC there. What's SC stand for? Service charge. It's $15. I have $15 left with the service charge, don't I? Everybody agree with that one? Oh, this is too easy. Oh, and then there's something with a CM next to it. What's that? That's a credit memo. It's over there with the deposits. Why? Because it got deposited. Okay, so I'm going to add the credit memo, but I've got to figure out what that is, don't I? What is it anyway? Oh, that went the right direction, didn't it? That's going to help us. Okay? 1100. What does it say? The NSF check, it says the check number 18 was correctly written. Oh, that's a clue. We'll use that. The NSF check was from foreign, a customer, for a receivable. We'll put it back into receivables, huh? The credit memo is a collection of a note. $60 of interest that has not been accrued, and the bank service charge is $15. So this thing is $60 of interest. Interest what, you suppose, seeing as they're giving me the interest? I bet you it hasn't been accrued, so there's no interest receivable, is there? It's interest what? I'm earning it. They're paying me. It's not interest payable. It's not interest expense. It's not interest receivable because I have not accrued it. It says they didn't accrue it. What is it? Interest revenue. I earned it. And then what's the rest going to be? What's the other 1,040 going to be, guys? They're paying off some of the notes. Note receivable is going to go away. When I make my journal entry, I'm going to do that. This one's going to be miscellaneous expense for the service charge, right? See you guys.
Yeah.
And this one's going to be what? Accounts receivable. They even said that. It's a customer on account. It's going to go back into accounts receivable. I'm going to make journal entries. Yes, sir.
I was just trying to find where you got that $60 interest earlier from.
Down in the paragraph. Read the paragraph down below. The credit memo is for the collection of note receivable, including interest of 60 that has not been accrued. Got it? Okay? I just read it. That's all I did. Okay? Are we good? I'm really mean to you guys, huh? You got to see how I am to the intermediate students. But you know what? They're getting to it. Boom, 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 boom. I got it. They're as frustrated as you are. I'm going to keep you that way. Okay, I promise. Okay? And when it gets so, it just works. It just works. So instead of asking that question, what could you have done? How many of you saw that on the problem? A few of you. You read carefully. That's what you do. That's even meaner, isn't it? Right? Look and read. Okay? And let yourself think about it. What does that mean? What does that mean? In fact, let's talk about the 708.62 it has there. Check number 18 was correctly written for $708.62 for payment on account. What would you immediately want to do? Probably look at what? Check number 18. 708.62. Huh. Well, it cleared at 708.62. Where else is check number 18 probably listed? That's on the bank statement. Where else would it be? In our records. Look up there. What do you see in there? 78062. You know what that is? They did a transposition. They switched two numbers. They're always divisible by 9. You know that from math class? They switch two numbers around. It's divisible by 9. What's the difference between 78062, the one that's recorded up there on our check register, right? The checks we have listed. What's the difference between 78062 and 70862, which is what the check really was? What's the difference? $72. Is that divisible by 9? Yeah. So if you're off by any amount, you always divide it by 9. See if it was a transposition. Because human beings do this all the time. We switch numbers around. No. Okay? Then the other thing you do is you divide it by 2. You know what that would be looking for? A debit listed as a credit or a credit listed as a debit. You'd be off by double the amount, won't you? Right? If you put a debit in the credit column or vice versa. Yeah. Okay? So anyway. So what do you want to do with that one? That's an error, isn't it? So I've got an error, don't I? But what should I do? I took out 780.62. So this is error on number 18, right? Error on check number 18. I took out 78062 from my bank account, my general ledger, right? Cash disbursements here. And I should have only taken out 70862. So what do I need to do? Add back what? You got it. Add $72. What do you think that journal entry will be for? See, we're going to do journal entry for this, right? This is what's on our books, and we're going to compute what we want to have on our books, okay? So what do you think? What does it say it was for? Payment on account. We debited what? We paid it. We credited cash and debited what for a payment on account? Accounts receivable? No. I'm paying. Payable. Account payable. Yeah. You guys are getting it, aren't you? Think how far we've come in 5 weeks. Really cool, isn't it? It really works. You guys are in pain, but it's cool how much you know, isn't it? You know what an account payable and account receivable is. To the extent that I can do mean things like this to you and expect you to know it. And you're starting to, aren't you? Getting there. Okay, by the end of the semester, you're going to have this wired.
Why did you put the King without $40 note as a miscellaneous expense?
Oh, it's a service charge. It's a miscellaneous expense.
Oh, that's makes sense.
Yeah. And then this 1100 here, that's 60 interest revenue and 1,040 note receivable. I'm just getting ready to make my journal entry with all that stuff, right? I'm going to use that this information over here is for the journal entry.
When we get done with this, can you explain like how recognizing factors into that?
Oh, recognition and realization?
No, I'm thinking about that.
Okay. Think about it. And, yeah. Okay, what else do we need to do? Let's find out what we know about that the bank doesn't know about, right? These are the things the bank knew about that I didn't know about we've done so far. What do you want to do? Let's take a look at the deposits, you guys. What happens? Are there deposits that cleared? Right? What's the deal on this? Are there deposits that we don't show that the bank does show? Oh, that's kind of an interesting one, isn't it? Look at all the list of deposits in the bank. There's one for $5,484.38. A huge one, isn't it? You see that on December 1st? Okay, they deposited that to our bank account, and we don't list it, but it came in December 1st. What do you think that probably is? I bet it was outstanding last time. Because I don't show it on my list of deposits, right? My receipts. But the very next one, 843.86, agrees in both places. You see that? I recorded it, and the bank got it in the same month. Don't have to worry about it. How about the next one? 941.54 agrees. How about the next one? 808.58 agrees, and then the 1100 is that credit memo we're going to take care of. Oh, there's one more on December 31st on my books, right? $967. The bank doesn't know about it yet. What do you bet we mailed that to the bank or dropped it off at the end of business? So how many outstanding deposits do we have? Deposits and transfers? One for $967 added. That's it? Okay. And then I'm going to deduct the outstanding checks. They're a little tougher. On the outstanding checks, what I want to do is look at the checks I wrote and the checks that cleared the bank. Now the first one you see is number 14, but I didn't write that this month. What do you bet that was an outstanding check last month? And that, in real life, what we'd have to do is check the ones that were outstanding last month and still haven't cleared. It takes more than a month, which means somebody's holding the check for some reason. Happens with payroll checks a lot. People get a $2 payroll check, you know, when you get rid of them, fire them or something, or they decide to quit, go to a different job, and they never cash it. It's been outstanding a long time. But anyway, so you can ignore the 148.29, but then 17, does it agree? 372.96? Yes. Did 18 clear? 708.62? Yes. Did 19 clear? 157? Yes. Did 20 clear? No. So 20 is outstanding. No kidding. So we got one, number 20. How much was it? 587.50. Okay, good. Okay, let's try 21. 234.15. Did it make it? Yep. How about number 22? 578.84. Yeah, it's over on the far right. They got it. Their order's weird here. On 23?
No.
23 didn't make it. See how easy this is? Now, in real life, there might be lots of checks that don't clear, right? A whole huge block at the end, and we just add them all up. Plug it in. Okay. 168550, 8750. Way to go, Steve. Okay. You guys getting this? It's pretty mechanical, but it's useful. 8750. Okay, that's number 23. Number 24 make it? Yes. Number 25 make it? Yes. Now, would we have noticed here that number 18 was not the same number? Probably, right? Just going through, if you're matching them up, you know what, we use a computer program to do it anyway, so we find out right away that it didn't agree. Okay? All right. So I guess that's all the outstanding checks. Add those two together, what do we get? What's 587.50 plus 1687.50?
2275.
Okay, now the moment of truth. Do we agree? What's 10,951 plus 967 less 2275?
Oh.
That side of the room do that. This side of the room do 873663 plus 1100 less 15 less 250 less 72. What do we get? And you know what, you practice things like this one's a real hard one, by the way. You'll find the problems in the book aren't as bad for the most part. There might be one similar to this, right? Work your couple up. Look at it. Think about it.
Well, the question that we work on the quiz, do you set up the same on this?
What?
Like, given, well, just be like,
Oh, I think the quiz is all multiple choice. I think this one, so I can get it graded really quick.
well, the next test then we'll.
But you know, I don't know.
Okay.
It could look just like this, and I could ask you multiple choice questions about it. I'm real good at doing that, aren't I? Yeah. So it doesn't help that they're multiple choice, really, does it? Work it first, then go find the answer. So it won't look exactly like this, no. I would never do that before. Right? Four. Okay. How much is the balance? You guys on that side for the balance for bank. What is it? How much?
9,670.
Even?
No, other side, my bad.
This side?
Yeah.
670 what?
Just 670.
Even.
Yeah, that's it.
What, is that what everybody got on that side?
What did you?
873663 plus 1100 less 15 less 250 plus 72.
Yeah.
Is that right? Wait a minute, there's 63 cents.
Wait, no.
Is that what it is?
I got 9,643.
Oh, we got, who, what, anybody else get either one of those?
Yeah.
Oh, you screwed up. That's why we have lots of people do it. Okay. And in real life, you just add it twice in the adding machine. Right? So 9,6 what?
43.
Oh, let's try this side. What do we get over here?
9643.
Uh-oh.
That's what I got.
9643.01.
Yep.
When did we screw up? 964301. Now we're off by 62 cents. You got the idea? We want these two to agree, of course. What did I mess up? Is this number wrong? Is it not 63 cents at the beginning?
No.
What was it? 8736. You guys screwed that up. But what's the balance per book supposed to be?
90 cents, but it's like eight.
Oh,
Balance per book is supposed to be $8,735.93.
Yeah.
this is 8. What? 7.
3, 5.
35. Can't believe you guys did that.
With 93 cents.
5.93. It's still not going to quite balance, is it? How come it doesn't agree? I don't think you guys can add. Break the news. 8735.93 plus 1100 less 15 less 250 less 72. Where are we at now? What do you get? 9643. 964293 or something? Is that what it is? We must have written something else down wrong. 587. The outstanding checks are 587.84. Keith did it. Can't believe that's the first mistake I ever made. 567.84. And 1687.50. Please be careful. No, that's not it. What were the outstanding ones?
Change check 20.
No, it's 587.50. That is right. I was right. What have we screwed up here? Darn it. 587.50 and 1687.50. No, I have those right. Is that 2275 even?
Yep.
And this is the balance per bank? Yeah? This has got to be wrong, you guys.
What?
The balance per books is wrong. The beginning cash, 10,740.93, plus the cash receipts, less the cash disbursements, can't be quite that number. What did you get for a total down here now? 96 what?
I think the cash receipt is 90 cents, not 20.
It's not 20 cents, it's 9 cents.
This one?
Yeah.
90 cents.
We're at
5565.90?
Yes.
All right. And then what does that make the ending?
73601.
Now, how about that? Now we got it. How many of you guys totaled that? Oh, well, anyway. So 873601 plus 1100 less 15 less 250 plus 72. Is that 964301? I bet it is. Okay? Got the process? And then all we need to do is do the journal entry. You got it. Okay? It's working now? So be careful when you add them up, obviously. Okay? All right? So what would the journal entry be? Which part of this is going to be the journal entry? We don't do entries for the bank, right? Besides, the bank's okay. They're going to get these things. This is going to be our adjusting journal entry. And the authors show a whole bunch of journal entries. Just do one. It's silly to do more than one. Okay? How much is cash now? $8,735.90 or $736.
$8,736.96.
And 1 cent actually.
Yeah.
Yeah, you're right. 873601. Yeah. Okay. This is what's on the books. What do we want it to be? This. What do you want to do to cash? How about debiting it for the difference? Take the difference between 964301 and 873601, and you'll have the debit to cash, won't you? That's the debit to cash. So here we go. Here's our adjusting journal entry. This is easy. Once you get to this point, it's really easy, so don't fail to do this part. Debit cash for the difference. How much is that? What's 964301 less 873601? It's the total of these guys in between, right?
907.
907? Great. Okay, so then what do we want to do? What do you want to do about that? That's interest revenue, isn't it? credit interest revenue to record it for 60. Does that sound good, guys? How about crediting notes receivable because they paid it off? You like that idea? For 1,040? Oh, what else do we need to do? That's this one. Miscellaneous expense for the bank charges, or you can say bank fee expense. Put the word expense on it because it's an expense, okay? Miscellaneous expense, bank expense. How much is it? $15. What else do we need? Oh, there's this NSF check, right? What do you want to do with that? Put it back into accounts receivable. Ah, see, you could do a whole bunch of journal entries here. Debit miscellaneous expense, credit cash, debit accounts receivable, credit cash, debit cash, credit notes receivable, debit cash, credit interest revenue. But what for? You just go to cash once, huh? And then what else do we have left, guys? Account payable one down here. Am I right? It's $72, and we want accounts payable to be more by $72. Is that right? Yep. Debit cash, credit accounts payable. Okay, now what I want you to do is add 970, 15, and 250. 907, I'm sorry. 907, 15, and 250. And then subtract from that 104, 60, and 72, and make sure you got 0, so your debits equal your credits, right? Make sure your debits equal your credits. Do they? Yes, we're done. So all that work to get this entry, yeah. But now your cash will be right, your miscellaneous expense will be right, your receivables will be right. Got the idea? Notes receivable will be right. The other revenue recorded. Okay?
What does it give us cash out?
Where does it give us cash out? Cash out.
Yeah.
Okay, up at the top, it says the following checks and receipts were recorded for the month of December. There's the checks they wrote, which would be cash out, right? Credit cash, debit, a whole bunch of different things. And there's the receipts, that'd be debit cash, right? That's it. So take your beginning balance, less the checks, plus the deposits, that'll give you the end. We had a heck of a time doing that apparently, but maybe that's what we do. Got it? So should we do something else? Another 35 minutes.
Is that like the problem you're having with bank?
The bank reconciliation, I'll talk to you. But the same idea. Yeah. You just start with the bank balance and the book balance at work until you get to the previous adjustment. And then make
Add this, subtract that, add that. I can't remember for the consolidate. How much should I go on?
Yeah, just give it to you. You guys want to do that? You want to do a prop? Yeah, because one is the next chapter. 2 is the next. 3 is the next chapter. So you're doing 2. 4 is the last chapter. I do 4 to get ready for the test. 4 is the quiz I just did. That's 5. And then I already do 5. So 1, 5, and 6, and I got quiz. 2, 5. Yep. 2, 5.
12, 15.
You want to do any problems from the book?
Yeah. 12, 15.
Want to do another? Want to make up an allowance one? You guys do one?
Sure.
Yeah. You all right? You want it? Worthwhile? Let's make up. I'll make up one very similar to the other one. Only maybe what we'll do this time is we'll do the journal entries, okay? All right? So I'll give you one. Tell you what the balances are, okay? And then you can do the journal entries. Okay, let's say accounts receivable. But better yet, let's make it a little more involved. How about if I gave you this? Accounts receivable has a beginning balance of $10,000. The allowance at the beginning for doubtful accounts is, I don't know, $800. See you guys. Thank you for coming.
Thank you.
The bad debt, or the sales rather, are $82. Oh, no, wait. Take it back. I don't know what sales are. Sales, I haven't started the year yet. Let's make sales be 0. And let's make bad debt expense, I haven't started the year yet, be 0. Let's just go from there. Okay? So number 1 is sales, $80,000. So sales for the year, all on account, okay, are 80,000. Okay? All on account. Credit, right? 2, cash receipts from customers is $82,000. 3, write-offs of accounts receivable are $1,300. 4, part A, uncollectible accounts, bad debts, are equal to $1 of sales. 4, part B. So these are separate parts, right? Independent, okay? Bad debts equal with 8% of accounts receivable. Everybody follow everything I did? Oh, one more thing. Let's change this one to 5. And number 4 would have been reinstated and collected $400 of this one. I wrote off $1,300 and then I reinstated and collected $400. I'd like you to write me a journal entry for this, 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 and then 2 different journal entries, one for each one of them. You got the idea? There's 2 different ways of doing it. Okay? Start with these beginning balances and go. Can you do it? Give me the journal entries. You could also then give me the ending balances and the net realizable account receivable. And we'll take a few minutes to do that. That might take you a while. Do one thing at a time, and then after you do it, post it, which means copy it into the P accounts, right? You'd be going into the general ledger. I bet you guys could do this. It's a cool problem. Maybe I should replace the one on the quiz. No. This is more complex, so I got some.
What is number 4 say?
Number 4 is reinstated and collected 400 of the 1,300. So I wrote off 1,300, then I reinstated and collected. They gave me the money. They sent me the check, right? So all of those first 4 are going to adjust those balances, right? So before you do your bad debt journal entry in number 5, you need to get your balance from those first 4, right? You got to record them all and get the ending balance. So those are beginning balances and receivables. Beginning balance and allowance, right? And then we go from there. I think you guys can do this.
Cash received.
Yeah. Sales in number 1, 80,000. Cash receipts from customers, 82,000. 3 is write-off of 1,300. 4 is reinstated and collected 400 of the 1,300. 5A is that we think bad debts are going to be 1% of sales. What are you estimating with that? Bad debt expense or allowance for doubtful accounts? In 5A, what are you estimating? Percent of sales, bad debt expense. 5B, bad debts are 8% of receivables. What are you estimating? Allowance. You guys know how to do this. Yeah. But you got to find the balances first. Right? Yes.
Would the reinstated account be for reinstated revenue?
No, it's not going to be revenue again. You never took away the revenue. You recorded it to a bad debt, right?
Okay.
Remember what you did when you wrote it off? You just reversed the write-off. And then you record the cash back, right? So there might be 2 entries for that. For the reinstatement, you can either use 1 entry or 2. 1, it looks kind of funny. 2, it looks more normal, right? So then just undoing the write-off and then collect the cash. So you can make it into 1 entry if you want. Kind of a waste of time to debit and credit the same account at the same time. Can you do this? Aren't you doing it?
I just got here. I missed it.
Oh. That's okay. Give it a shot. This is that allowance for doubtful accounts method, right? And we spent almost an hour probably on doing that again. Sorry about that. We've been going an hour and a half. So watch the video and see it again. This is a little more advanced, but it's the same stuff. I know you know how to record that sale. Debit, credit. Write down number 1. Write down a journal. Debit what? Credit what? And then post it into the T accounts, okay? Copy it. Then number 2, write down that entry. Know you know that one. And put it in the T account, okay? You won't have a T account for cash, but you send whatever you want. Here we go.
Is that cash receipt?
Yeah. Says sales 80,000, all on account. Cash receipts 82,000. Write-off of receivables 1,300. Gave up, right? We did these today in class. Reinstated and collected 400, right? I do everything really fast. I know. The author does it pretty quickly too, don't they? You read it.
Right up to 75,000.
We wrote up 1,500 or 1,300. I apologize. We wrote off 1,300. Reinstated and collected 400 of that. Okay? So the net write-off is going to be the difference. It's 900. And then in A, part A, these are 2 separate parts. Bad debts is 1% of sales. And then in B, bad debts is 8% of accounts receivable. You have 2 different entries, right, for that last part. Working, guys? Going good? Are you done? You might be. How many have done the first entry? Number 1. Everybody? Okay, what's the first entry? Debit. Accounts receivable, good. For 80,000. Credit what? And then what'd you do? Notice I'm starting to not write revenue. Everybody knows it's revenue. I mean, right? As long as you know, you're okay. Okay. What do? Put the 80,000 up here. Did you guys do that? And put 80,000 in here. Everybody happy? Okay. Now, what do you want to do? Number 2. Have you written that one? That one's easy too, isn't it? What's 2? Debit cash. 82,000. Credit what?
Accounts receivable.
Excellent. So we don't have a cash account, but you can use one if you want. We took 82 out of here. Okay. You have number 3?
Debit, bad debt expense.
Is that what it is? Writing them off. I think you debit bad debt expense when you set up your allowance, don't you? Debit bad debt expense and credit allowance for doubtful accounts. That's not writing off accounts that you found out were bad, right? That's setting up the allowance in the first place, replenishing the account. So that's a logical mistake, but it's a mistake, isn't it? Writing them off is when you give up.
Debit allowance for not.
Debit the allowance, because we're going to reduce the allowance because we found a bunch of them, right?
Credit accounts receivable.
Yes, so we're going to debit, that's good. Okay, so that's a pretty common mistake and pretty logical mistake, but do you see why it's not right?
Yeah.
Okay, excellent. Okay, allowance for doubtful accounts, and we want 1,300 to come out, right? And we gave up, so we're taking 1,300 out of here. That's going to give us a debit balance, isn't it? We didn't have a big enough allowance. 800 wasn't enough, but we'd still do it this way. And then you take it out of what, you said? Accounts receivable, because we're giving up, right? We found 1,300 of the ones we allowed for, and we also took out 1,300 from receivables. What about 4? They're going to give us cash? You can do that.
Allowance.
And credit the allowance. Put it back into the allowance. Okay? Because we should not have written off 400 of it, right? Now, what you could do instead, if you want, is you could make that 2 entries, right? What would it be? To reinstate the receivable would be to credit the allowance, just crediting this, right? Undoing it.
And debit the accounts receivable.
Yeah, and debit accounts receivable. If you did it this way, this is just fine. Okay? And then what would you do?
And you would debit cash and then credit accounts receivable.
Yes. And what that's going to give you, of course, is the same thing as the gentleman just gave us, right? Because these 2, debit and credit, cancel. What do we have left? Debit, cash, credit, allowance. Debit, cash, credit, allowance. Either one's fine. Right? You can do both entries or just do that one. Everybody got it? So then we need to take that, right? Debit, cash, credit, allowance. Because the account receivable would be both debit and credit. We don't need to put that in there, do we? Okay? And then the allowance goes back up by 400. Okay, so now tell me what the balances are. You had to do all that first, and then you got your balances. Balance of sales is 80,000. I can do that. Okay. What's the balance in accounts receivable? I put 400 in. I took the 400 back out. So I guess my cash receipts weren't 82,000. They were 82,000 plus 400, right? So what? How much is it? 6,700. Okay, good. What's my balance in the allowance? I took 800 less a 1,300 debit plus a 400 credit. Where am I at? 100 debit. Everybody agree? Okay, and now I want to make my adjusting entries. Everybody good? Okay, in 5A, what am I doing in 5A? Bad debt expense is going to be what? Debited, right? In both cases, what's the entry going to be in both cases? For 4A, not the dollar amount, or which 5 is it? I apologize. For 5A and 5B, what am I going to debit and what am I going to credit? What accounts?
Debit bad debt expense.
You bet, because this is where I get my bad debt expense once a year, right? Or actually anytime I do a financial statement, monthly, quarterly, annual. And credit what?
Allowance for doubtful accounts.
You got it, guys. And now it's just compute how much. What's 5B going to be? Same, right? Just different amounts. That's it. great, isn't it? Everybody see it? Okay, now, how much? Okay, for the first one, what are we doing? 1% of sales. What's sales? 80,000. What's 1% of 80,000? 800. What account do I want to be 800? Bad debt expense. That's it. So what are you going to put into bad debt expense? 800. What are you going to put in the allowance? 800. What does that make each of them if I asked you what the balance was? Obviously, bad debt expense is going to be 800, right? What's in the allowance now? 700. Ta-da! Everybody got it? It's easy, isn't it? You can do this. Okay? Do B. It's a little tougher. Do B. And you can draw new T accounts for that, obviously. Changing bad debt expense and the allowance, right? Let's do that one. You want bad debts to be 8% of accounts receivable. What should be 8% of accounts receivable?
536.
That's 536. Let's round it to, I don't know, 550. And let's just make it 500. Let's make it 500, right? What should be 500? What account? Really? You just took an estimate of your receivables. The portion of the receivables I'm never going to collect is called allowance. You want the allowance to be 500. Is everybody staying with me? And why? Bad debt expense goes in the income statement with sales. If you take a percent of sales, that's bad debt expense. That's the sales you're never going to collect. Allowance goes in the balance sheet, right? With accounts receivable. If you take a percent of the receivables, that's your estimate of the receivables you're never going to collect. By definition, the allowance is your estimate of the receivables you're never going to collect. Got it? It's funny, it's hard to get it through your brain, and then once you do, it's kind of like, well, duh, of course, right? Okay, are we there? Everybody's getting there.
Okay, so you put 500 in the allowance.
Yeah, 8% is going to be the allowance is 500. I want the allowance to be 500. I'm not going to add 500 to it. I want it to be 500.
Okay.
Right? That makes sense? I want it because I want my estimate of how much I'm never going to collect of those receivables, which is about $500, right? I want that to be the balance in the allowance. So on my balance sheet, I'm going to show 7,600 of receivables less a 500 allowance for a net receivable of 6,200. Is that doing it? Well, what do you have to do? I got a debit of 100. How do I get to a credit of 500?
Wait, so what did you, in 5A, where did you put the 800 for allowance?
It's still going to it'd be a credit to the allowance.
Okay.
Right? But what I'm doing is I'm forcing bad debt expense to be 800 in A. And the allowance just falls wherever it is.
Okay.
In B, I'm forcing the allowance to be 500 in this little example, right? And bad debt expense falls wherever it does. And that's what hangs people up. It's like, geez, I want both of them to be what I want it to be. No, you can't. You just get one or the other. Okay? We'll go back. You weren't here for the first part. Is everybody getting this? Getting it? Getting it? We can go back for a few minutes and look at that one that was on the quiz too. It'd be a good idea. Compare it to what we're doing here. Same stuff. So how much do I have to add to get it from a debit of 100 to a credit of 500? 600. Okay? Excellent, guys. So what's bad debt expense going to have to be, obviously? 600. And we're there. We got it. So that's 5B. It's $600 instead of $800. The way my numbers work out. Are we good?
So then you debit bad debt expense for 600.
Credit allowance for 600. The reason is I want the allowance to go up by 600, right? It's got 100 debit, and I want it to be a credit of 500. Right. So I got to put 600 in, and that forces me to put 600 in bad debt expense. In the other one, I wanted bad debt expense to be 800. It's now 0. I put 800 in there. That forces me to add 800 to the allowance. Make sense? Okay, and now I get whatever that allowance is, 700. Let's go back for a minute to where we started. Okay. This is, do you have the quiz 3, 4? Or 5, 6, 7? Here's one you can actually see. Everybody else is here when we work with this? All right. Look at this again. This is the same, exact same thing, right? Exact same thing. Except I just gave you the balances. You didn't have to compute them like we did in the last problem. I made the last problem harder. What did we start with in this problem? This is number 2. What did we start with here? 120 in receivables, 600 in sales, right? In part A, what did it say? We have 2,000 in the allowance, right, guys? And then what did we do? We said, I want uncollectible accounts to be 2% of sales. What are you estimating if you take a percent of sales? Bad debt expense or allowance? Bad debt expense, because sales are on the income statement. Bad debt expense is the portion of the sales you're never going to collect, right? So you're estimating bad debt expense. So I want bad debt expense to be 12,000. Right now it's nothing. What do? Debit it for 12,000. What does that force you to do to the allowance? Credit it for 12,000. But the allowance has 2 in it. If you add 12 to it, what do you get? 14. Done. Easy, isn't it? Could you do the journal entry or do the T accounts and get the balances? Who cares, right? Have to do both anyway. What's net realizable account receivable? It's the 120,000 receivable less the 14 we think we're never going to get. It's 106. Boom. Okay, it's the same problem as we just did, only that one's more complex. You see it? Okay, let's do part.
Wait, can I ask a question?
Sure.
Okay, so when you say that you have a percent of sales, that's always going to be an estimate of the bad debt expense.
Mm-hmm.
And then when you say that you have a percent of the accounts receivable, that is always, allowed.
You got it. And why? Because sales is what you sold to your customers. The expenses on the income statement are all the costs you incurred to get those sales. So if you take a percent of the sales you expect never to see, what are you estimating? Bad debt expense. It is. So at first you can remember it, but then if you think about it, well, yeah, it goes on the income statement with it, right? If you take a percent of the receivables, or if you just look at the receivables, you might look at all your receivables and say, I'm going to collect this one, I'm not collecting that one, or I'm collecting 50% of this one. You got the idea? You get added up. Or you can age your receivables. How many are current? How many are 30 days past due? How many 60? How many 90? The current ones, almost all of you are going to collect. 30 days past due, less. Got the idea? The ones that are 180 days past due, you're not going to collect anything. So you set your allowance up, right, based on your estimate of the receivables you're not going to collect. Well, that's the allowance. That's all we're doing. So, of course, if you estimate based on your receivables, you're estimating the allowance. Wait a classroom.
Hi there.
We'll be right out.
Okay.
Sorry. That's right. You do have a class. Tell me, come in. Okay. Does that make sense? Okay. And that's all we do in the rest of this problem, too. You can go back and look at it at the beginning. Okay. Right? It's just different ways of doing the same thing. It's always debit, bad debt expense, credit allowance. Okay? We're good? Thanks for coming, you guys. Yeah.